Hello and welcome to this weekend's video, which is going to be pretty packed, covering all the asset classes, but of course most of the time will be spent on equities, and it's called S&P 500. How close to a bottom are we? This is a very valid time to bring up this question, considering Friday's mid-session behavior right before Powell started speaking. And that was the time when I called for rebound to start. You know pretty well what I do on my site for clients and about the premium Telegram channels, all the daily analytics extensive into your mailbox and one-on-one support for you. Thank you for liking these videos and subscribing to the channel. Let's start with how equities looked before Friday's non-farm payrolls. You see that the situation was pretty ripe and the setup was exactly readying for a flush, which was exactly what happened. First, though, equities started to go up because those headline and private payrolls were not as disastrous as I had expected them to be. However, there was clear willingness to fade the move, and that's what clients benefited on tremendously. I warned about a trappy environment right after the data release, and the modest surprise to the upside provided exactly for that. However, that was the final line. It was up to the power hour when I issued this tweet whether and how solidly S&P 500 would close above its 200-day moving average. Anyway, in intraday terms, well over 300 Nasdaq points and well over 50 ES points were delivered in purely intraday terms, because the day was really fast, ripe with intraday traps, flush, and now comes the question, was it a sufficient enough flush? Was the subsequent rebound having such characteristics that allow us to think about a bottom approaching? Was it steady? Did it turn the pattern of lower highs into the pattern of lower highs and lower lows into a budding higher high emerging, or not yet? You remember as well about my skepticism regarding the pre-Trump appearance about the Bitcoin conference, and I had been pointing to the triangle that was, in my opinion, going to turn out to be a continuation pattern, meaning that prices of cryptos would go to the downside, because basically no fresh capital is being committed at this stage, and 0% capital gains tax idea floated is as well still very far from any kind of execution. Therefore, I had been favoring Bitcoin to go lower, and right now, as I'm recording it well before New York lunchtime, this is going down and is below 86,000 already. Another clue was a prior weekend's bullish call that I had made right before the surprise tweet that resulted in this long white daily candle hit the wires, and of course the weekend prior where I had called for the flush to begin, and now I'm calling for the decline to continue to continue lower, well below 83,000 bare minimum. Coming back to equities, before I dive into this equities chart, a couple of words about precious metals. Gold and silver, they had cut short their correction based on the deficit financing hitting midweek Europe, and clients were on the safe side of those moves, meaning early in the week I called for the correction to commence and bring prices lower, and once that initial reaction to deficit financing from Europe was in, I called for the correction to end and prices to go higher and to find solid bid relatively soon after non-farm payrolls, which happened as well. And as regards crude oil, downtrend and temporary bid Friday into non-farm payrolls solely for hedging purposes. Staying with the hourly chart, because there are a few important points to make. As for the questions that I have been bringing up, we see that the pattern that we do not have a higher high yet. 5808 in ES would be one area. It could be attainable. We are seeing some encouraging signs sectorally. However, given the fact that financials are still acting suspect, and if I look at communications, discretionaries, and tech, the signs are still pretty much mixed. So I would look for tentative bottoming process. It doesn't mean that we go straight up and take out 5808. We can go equally well, still well below 5750. It's very doable as well. And it would be 5872, which was the bull trap that I had called on Wednesday to be just that, a bull trap, and prices reversing to the downside. That would be the true level which would flip this chart bullish. As you can see, we are nowhere near that, and this qualifies more or less as an oversold bounce. So this is almost exactly the situation of the glass being both half full and half empty. I'm leaning one way, and it is that I would slightly favor the bottoming here to be starting in earnest. Very valid question, because we will be diving into volatility approach to bottom calling, is whether we have had enough of a flush. In price terms, it doesn't look like that. But as you can see from this VIX chart, it is a 4-hour chart. We can see a rejection, but given that it's Friday, and Friday is always an OPEX day, it could distort that meaning, and we could be heading back somewhat higher, at least retrace half of the move from the very top to where VIX closed. However, there is a distinct pattern of the CCI declining, doing a bearish divergence. So that's why I would say that we are way closer to a bottom in equities than we are to the flush, taking us more than halfway lower still. Two weeks ago, when talking yen carry trade unwinding, I had brought up this VIX to forward-looking VIX, short-term VIX, however you call it, chart to point out that the situation is nowhere near enough panicky. And after 2 weeks, it had reached approximately that point. We see quite a rejection in this ratio going higher, and it's slowly starting to be susceptible to gravity and returning lower, which is another supportive sign for us to say that we are closer to the bottom than to endless series of down legs and intraday traps as we had seen and as I had walked you throughout this week. Have a look at this sectoral chart. We saw tech doing well. Financials, these are the odd ones. As they say, when there is a final part of the bottoming, they come for the leaders, for the generals last, and this could be what is happening with financials. The sentiment overall for equities is pretty bearish, and it would depend upon how soon retail traders find appetite again to start buying. That is as well something which is not allowing me to say here that the bottom is in, but the bottoming process can take shape rather in time than in renewed downside momentum in price. Which sectors would I point your attention to further on? Staples outperforming discretionaries. Little surprising given the status of the consumer. The negative expectations. High uncertainty, not just about tariffs. Impact of tariffs and trade policies on corporate earnings. Lofty valuations. High beta being hit most. Sectors which are benefiting are those domestic ones least exposed to tariff risk. And without further commenting on, have a look at what industrials are doing. How does it match with what I had started this video with? That's an important sign for currencies as well. Look at real estate. It had not been the stellar performer. However, as in staples to discretionaries, there is a distinctly defensive bias to the bottoming process, just as much as in utilities. So, the signs are mixed. However, you can hear roughly that I assign us a great probability of being relatively close to the bottom. And of course it will be a matter of timing it and picking the right levels, being patient for a good risk-reward ratio, both in swing trading terms and intraday terms appearing for clients, because there is still not yet enough evidence of a turn. The fact that the bleeding had stopped for a day or two attests just to a technical pause in selling local interim bottom. There could be, and it is very likely that there would be, another push lower. But how far would it go? Would it be as panicky as what we had seen Friday, or the selling pressure would stop earlier than that? I guess already these questions give you enough hints of where my response is leaning. My join page will help you select what's right for you based on what and how you trade. And you know everything else. Obligatory disclaimer, and have a great weekend.